Welcome to Contractor AI Guide to Understanding Job Costing. Job costing stands as a critical tool for contracting and home service businesses aiming to navigate the complex financial landscapes of their operations. It's not just about tracking expenses, it's a comprehensive strategy to ensure every dollar spent on a project is accounted for, from direct costs like materials and labor to indirect costs, including labor burden and overhead. Let's explore the what, why, and how, extending our understanding to include overhead calculation and recovery. What is job costing? Job costing is a methodical approach to accounting that assigns costs to specific jobs or projects. This includes both direct costs, materials, labor, and indirect costs, labor burden, overhead. By allocating these costs accurately, businesses can assess the profitability of each project with precision. Why is job costing vital? Accurate pricing. It enables precise service pricing by accounting for all costs, ensuring businesses cover expenses and secure profit margins. Profit margins improvement, understanding all costs, including indirect expenses like labor burden and overhead, informs pricing strategies that enhance profit margins. Insight into labor burden, recognizing the impact of labor burden, which covers taxes, benefits, and other employee-related expenses, is essential for full cost recovery. Effective overhead calculation and recovery. Overhead costs, such as rent, utilities, and administrative salaries, need to be carefully calculated and allocated to jobs to ensure pricing strategies cover total operational costs. Overhead calculation and recovery. Overhead costs are ongoing expenses not directly attributable to specific projects, but essential for running the business. Calculating and recovering these costs through job costing is crucial. Calculating overhead, identify overhead costs, list all business expenses that do not directly tie to specific jobs, including administrative salaries, utilities, rent, and marketing costs, total overhead costs. Calculate the total overhead costs for a specific period, typically monthly or annually. Allocation base, choose an allocation base, such as labor hours, labor costs, or machine hours that correlates closely with how resources are consumed by projects. Overhead recovery. Determine overhead rate. Divide total overhead costs by the total amount of the allocation base to find the overhead rate. For example, if annual overhead costs are $120,000 and the total labor hours are 20,000, the overhead rate per labor hour is $6. Apply overhead to jobs, multiply the overhead rate by the number of allocation base units, example labor hours, consumed by each job to allocate overhead costs to that job. Incorporate into pricing. Ensure that your pricing strategy includes the overhead costs allocated to each job, in addition to direct costs and labor burden, to set prices that cover all expenses and desired profit margins. Strategic markups and margins. With a clear understanding of total costs, including direct labor burden and overhead, businesses can strategically set markups to achieve desired profit margins. This ensures not only that all costs are covered, but also that each job contributes to the business's financial health and growth. Job costing is more than a financial tracking tool. It's a strategic asset for contracting and home service businesses. It provides a detailed insight into every aspect of project costs, empowering businesses to price accurately, manage resources efficiently, and ensure the sustainability and profitability of their operations. By including overhead calculation and recovery in the job costing process, businesses can ensure comprehensive cost coverage, supporting informed pricing strategies and robust profit margins. Investing the effort to master job costing, including the nuances of overhead and labor burden, positions a business for success in the competitive contracting and home service markets.